Thank you, ladies and gentlemen. If you wouldn't mind taking a seat at the back. Thank you very much. Tom, I can see you still standing up there. You're going to be in trouble any minute. He was talking to an advisory board member, so I have to excuse him, but still, let me get going, ladies and gentlemen. I'm going to hand you over to Christopher Marks. Christopher, Managing Director and Head of Emerging Markets, Corporate Banking Division, Middle East and Africa for MUFG. And today he is chairing our session, slightly larger session, on mobilizing natural capital, the global net zero race, and what is Africa's role. And I know he'll be introducing his expert overview first. So I know with COP27 on the horizon, this is the topic that's close to everybody's hearts. It's very much part of our mindset. So I'd ask you to sit back and enjoy what is going to be a really informative session. Thank you.
Karen, thank you. This is, for now, just a quick introduction of Marc-André Blanchard. Now, it is a common theme at this conference and conferences like it about how to mainstream getting large institutional investors onto the continent, doing the same kind of investments that they do worldwide. Now, Marc-André Blanchard is Executive Vice President for CDPQ Global, the Caisse des dépôts et placements de Québec. For those that don't know it, it is the province of Quebec's pension fund. It is one of the largest, most active institutional investors worldwide, probably the third largest renewable energy investor worldwide. We have worked with CDPQ to try to position getting them onto the continent, and indeed we have worked through a number of partnering arrangements to try to achieve that goal. Marc-André will talk about the challenge of bringing a big machine like CDPQ into new markets. I would add that in addition to being an investor, Marc-André is in charge not only of CDPQ Global, but with the sustainable business activity at CDPQ Global. He is equally a policy advocate. He was Canada's ambassador to the UN prior to taking on this role, and very much led Canada's push into some of the sustainable finance issues and blended finance issues before they became fashionable. So please, welcome me in joining and thanking Marc-André.
Thank you very much, Christopher. What a delight to be here. I'm really, I was so impressed by what I've heard. I was there from lunchtime on, and I really enjoyed the quality of the discussion and the debate, and I learned a lot myself. I wish that all my colleagues at CDPQ were here to actually participate and engage with all of you. Christopher mentioned that I was the ambassador to the UN. When I arrived to the ambassador to the UN, prior to be the ambassador to the UN, I was the chair and CEO of one of Canada's biggest law firm at the time, McCarthy Tétrault, and I arrived from the private sector. So the Secretary General of the time said to me, you know, we don't see many of you or many like you around here, and we just signed the Paris Accord and the SDGs, and I would like you to help us actually make sure that we can discuss and act upon the financing of the Paris Accord and the SDGs. He said everybody here is focusing on overseas development assistance, ODA, or public assistance, and it's just a tiny, tiny fraction, 150 billion of the $7 trillion of investment needed every year to climate, and at the time that was the number, climate and SDGs. And he says, you know, everybody's focusing on that little tree, but 90%, 95% of the money will need to come from the private sector, and nobody's talking about it. So could you help us? And that was my big thing when I was the ambassador to the UN. I really tried to do it because I said constantly to our Prime Minister Trudeau, I said, what do we need in the world? You know, what's needed in the world to fight climate change and inequalities is a massive build of infrastructure throughout the world, and in particular in Africa and Southeast Asia. And I said, Canada is a champion of that. Champion of that because we have big experience in infrastructure. This is one of the places we lead in the world. We're one of the top 3 really in infrastructure. A lot because of our past in hydroelectricity and the fact that we're a big country and all of that, transportation, but also because we have 8 pension funds like the one I represent. And I said, capital is needed for that. And I said, this is a big role for us to be relevant in the world. And it's a big thing it's actually, we need to do it to save the world from being on the precipice of unsustainability it's standing on. And on top of that, there's another competitor, like there's Uber came in and Airbnb came into the market. It's called China. You know, like the West needs to get its act together to offer an alternative to financing. To China. We need, China is a good alternative, but we also need to be there and offer countries alternative and all sorts of partners around the world alternatives. For me, there was also this geopolitical aspect. Now I'm sitting on the other side. I'm now sitting on the investor side, on the institutional investor side. When you look at if you ask me what's the biggest revolution in the last 70 years, there are three in my mind: globalization, digitalization or technology, and the third one is capital. Who controls capital in this world? When the Bretton Woods institutions were created in the 50s, the institutional investors were 250 billions. You know, we're now 250 trillions, 1,000 times bigger. And we're 900 times bigger, the institutional investors, than all of the multilateral development banks together. So how can we be part of the solution? Because we need to be part of the solution if 90% of the money for what is needed all over the world, and in particular in Africa, needs to come from the private sector. At CDPQ, we're $433 billion Canadian dollars of assets under management. We're invested 1/3 in Canada, 1/3 in the United States of America, 1/3 in the rest of the world. As our part of the rest of the world, we have $60 billion in emerging markets. Large chunks of it are in India, in China, in Mexico, in Brazil. We have some in Chile, in Colombia, in Indonesia, and I could go on and on. We own, obviously, country bonds from all over the world, including in Africa. But outside those bonds, we're not present in Africa. So why not? Why not? We need to change that. We know. We accept that. The question is, how are we going to go? There's a lot. One message to you today, you're all engaged in some ways, one way or another in Africa. Don't overestimate the knowledge of our institutions. We have a lack of knowledge on many of the markets, outside of the markets that we've been focusing on so far. And one area is other 54 countries of Africa, where we have very little information. And so we tend, when we have very little information about markets, you know it better than I do, we tend to overestimate risk, underestimate the opportunities. And then you have the issue of our fiduciary obligation. The risk-return equation is difficult for institutional investors like us in many parts of Africa. You know, there are only a tiny proportion of the 33 African countries that are investment grade, that are graded by Standard & Poor's. I know there are 54 countries, but there are only 33 that are even assessed, I think, by Standard & Poor's. That tells you something in terms of the work that institutions like Standard & Poor's needs to be doing. And a large proportion of that are at speculative or highly speculative grade. So we have a fiduciary responsibility. So it's very difficult for us to actually invest given the constraints we have. It's not impossible, but it's challenging. You know that. When I arrived to the UN, the Secretary General told me there are three legs to the stool at the UN. It's human rights, security, and development. If you only work on one leg of the stool at the same time, the stool doesn't hold. For me, it's a bit the same thing in this issue of financing in frontier market or in emerging markets in some ways. Look at it. If I look at it as a stool, we know what countries need to be doing They need to continue to work on upgrade their macro policy frameworks, more stability and on all sorts of ways from the macro perspective and also on the regulatory frameworks. But this will take time. It's a work in progress. It's never perfect. It's not perfect in my own country of Canada. So we need to work on the other leg, in my case, of the institutional investors' leg. So when I came out of the UN, came on the other side of the investor, I said we need to be clear, the private sector, the institutional investors, and I represent institutional investors. Entrepreneurs are different. Private venture cap is different. All sorts of source of capital. I represent one kind of capital that has fiduciary duty and is conservative by nature because of our obligations. But I said we need to be able to articulate what it would take for us to invest more. So we worked with the Investors Leadership Network it's a group of 14 institutional investors like us. We work with the Sustainable Market Initiative of Prince Charles and the GISD, the Coalition of the Private Sector with the UN. And yes, it's a lot of talk, but I think it's helping with action. So it's clearer than ever. And, I think actually we need to keep working on blended finance to create market equivalent investments to mobilize private sector investment for climate and other things. Blended finance entails utilizing catalytical capital from a variety of sources. ODA, multilateral organizations, multilateral development banks, family offices, development finance institutions from donor countries, local institutions, local entrepreneurs, local partners. And that can be done in a number of different forms. First, we need to increase the first loss provisions and guarantees. So we need to work with, it includes dealing with one of the biggest impediments for us institutional investors. It's the FX risk, the currency risk. When I look at my portfolio at CDPQ, I looked at it a year ago. I don't have the recent numbers, but just to give you an idea, our 60 billion of investments in emerging markets had suffered over the last year before a setback of 19% just on currency. And we have to report twice a year our results in Canadian dollar. So this is material for us. So we have to deal with that. And we have to actually work with multilateral institutions, with multilateral development banks, multilateral institutions like the Invest Africa, but also with governments we need to bring the development finance institution to everybody to work more on the development of bankable projects and make the instruments both for the loss, the guarantee, the guarantee pool and the development of bankable projects. We need to make sure it is now up to scale for investors like us to be able to come in. And this is not easy. I actually believe the part that is the easiest and where actually resources has not been put enough on it by countries like Canada and the UK and others, it's actually on the development of bankable projects. I really believe if we put that on steroids, with real money behind it and real resources, we can achieve a lot. And we can reduce the risk a lot and the perceived risk that we have a lot as well. So another thing that is very simple for me is that the MDBs, there needs to be a different mindset in most of the MDBs than what is currently. A lot of them see them as the preeminent institutional investor role. Actually, they need to see it as a partnership with the institutional investors like us. They need to share their data. If we add their information about what has worked and what has not worked, and their own returns and everything, more transparent to us, that would help us to actually de-risk us and help us understanding better, assessing the risk better. And that could be done. The GEM system of the World Bank could be opened very rapidly and should be done. And we should all work as partners rather than as competitors on that front. The MDBs are sometimes crowding out the private institutional investors like us, and we need to work side by side. They need to be more open to co-investment than they are at the moment. But actually, I believe that also, so the MDBs can do stuff, but it's going to be outside of the MDBs that we're going to be doing the most stuff, like where actually I think also real action could happen. And I want to finish on this by actually talking to you about, Christopher has referred to it. We call it Gaia. It's a platform, a blended finance platform, because I liked one of the speakers who said, we talk a lot about Africa, we need action. So I was like this. For many years, I've talked a lot about Africa and the UN. We did some action. Don't say that everything we do at the UN is just talk. But now I'm on the investor side. And actually, I think we can move and we can actually do real things. And the interesting thing is you would have thought that this idea would have come from a guy like me at CDPQ. It did not. It came from, and this is where it needs to come from. It needs to come from our investors, that are in our asset classes, who actually believe there's a great opportunity. And that's what happened in this one. So a team in our sovereign and quasi-sovereign lending team came up with the idea. I'd worked with MUFG in the past. MUFG is this great institution that does a lot of project finance. So they've put together a platform, a $1.2 billion platform for lending in 25 countries, 10 of which are in Africa. And it's a lending platform with a very specific niche for adaptation infrastructure, water treatment, waste management, seawalls, ecotourism, and the likes. And it's in partnership. If it closes and all things are aligned, we need more help and more engagement to actually make it real. But we want to make it real this year. And both institutions, the interesting thing is this, in this one, was I've never seen a project that received so much enthusiasm on the part of our investment committee and our executive committee at CDPQ. And I think it's the same thing if I can talk about MUFG. There's a lot of enthusiasm and a lot of engagement. So people want to do these things. So this platform, 25 countries, low income, lower middle income, $5 to $75 million per project, up to $100 million per country. 10 countries are in Africa. And the minister from Tanzania is part of that. We are working with the government of Tanzania now to get the non-objection letter that is needed, because we are partnering with the Green Climate Fund. And we're also partnering with FinDev Canada and some other philanthropics. And we hope to partner furthermore with some other governments and some other to actually help us build both on the de-risking and on the project preparation. And we're going to work with multilateral organizations as well. But this is an example. We think that why we're so excited about it? It's because if we get it right, if we crack that nut of getting for an institutional investors like CDPQ, I'll talk very selfishly, of actually the right risk-return equation, and if we get it right, this is something that we will be able to replicate many times. And this is something that will open the door after to actually get more involved in some investments and go even, because we like to go direct in infrastructure investment on our side. That would also lead the way to do that sort of things. So, and I'm concluding, what it takes a lot of engagement. It takes a lot of engagement amongst partners. It takes things at CDPQ, an institutional investor, as innovative as we have been in our history of 60 years. We've never done something that is actually like that with so many partners together and actually getting the level of trust at the right level and this is exciting, but it takes this SDG 17 about partnership to another level that I did not imagine when I was at the UN. It takes like a different way of working all together. Governments from the south, governments from the north, and investors, local and foreign institutional investors like us, and multilateral organization of all kinds, and philanthropy, and family offices, and technology. So that's why I was so excited to be here, because all of their representatives from each of these paths and strats of what is needed to make all of this happen. I thank you very much for your time and listening to me, and I'm excited by the work you do, And let's hope that we will engage together at some other time. So thank you very much. Thanks, Christophe.